Hey, what's up, everybody? So thank you for joining me, episode 61. Today, I'm going to tell you about the market and how these institutions and hedge funds are manipulating you. It's easy as that. Institutions are trying to steal from you. They manipulate the market. They put you in fear. You scare sell. You take the loss. Now, how does it happen? They manipulate individual stocks with bad PR, short reports, downgrades. They also manipulate with upgrades. Now, understand this. They manipulate both ways, but they're already positioned in there. So when they're saying, sell this, and they're lowering their price target, they already have the puts. They already sold you the calls. They already have the stock ready to short to force it down. So yes, they own stock in the companies when they short them, because they push stock onto the market, which forces it down, supply and demand. Now, what else can they do? All right, they can buy options, execute the options into shares, and continue to sell them. So if you see a spike in call options, someone might be executing their call options just so they can force the shares down, okay? I think I saw that happening today. Somebody made a $1.28 million bet on space. That space is going down. Now, the good thing for you apes is, and if you're an ape is, AMC and space, I think actually might have some good movement after hours, all right? I heard some chatter, so I would actually check those out after hours. I don't look at stuff live. What I do is I teach you guys. I teach you guys to plan ahead and secure profit. That's what today's lesson is going to be. Planning ahead and securing profit. And I'm going to tell you the ways we can do it, okay? Because I know some of you guys only have 3-day trades. If you trade 4 times in a 5-day period, you freeze your account. I don't want you to freeze your account. The market is volatile, right? So I explained that a couple of days ago. There's less volume, which means there are greater moves up and greater moves down. Like today, when your stocks kind of threw up on themselves, if they did, right? There's less volume, so it's more volatility. So there's going down, so it's even scarier, right? This is how the institutions, the hedge funds, this is how they manipulate you, okay? So clarification, if you only watch me on YouTube and you're not part of my platform, you only get updates as they happen for the next day. So when I tell you I know 2 things about the market, UVXY is going down and STX is going up. If you're part of my platform, you knew that today, UVXY, we were waiting for the spike. I thought I saw it spike 3 different times. I got in all 3 times. I'm going to tell you about those positions, okay? But specifically, we're talking about STX. So we know if you're part of my platform, history repeats itself, meaning every morning we see STX spike and then sell off. So this morning, when I saw Taiwan Semiconductor had bad news, right? They came out with earnings. Wall Street didn't like Taiwan Semiconductor. I looked at Micron Technology, also down pre-market. Now, keep in mind, STX was up 1.5% pre-market, okay? So I was planning ahead. I said to myself, if the stock, and it was up to $91.50 pre-market and $91, I said to myself, if the stock goes to $90, which is less than what it was pre-market, 90 and a quarter, I'm going to sell my $87 options for $325. Somebody will pay $325. They would have paid more. It went to $90.70 at open, meaning it spiked up like I told some of you. Now, I didn't tell you guys to sell your options. Why not until I sold mine? Because I only realized this at 9:29 a.m. when I read the information about Taiwan Semiconductor, and then I looked up Micron, and I looked up Microchip, and I looked up a couple others, and I'm like, shit, they're going to sell STX off. So I know I was probably a 20-minute late, but you still were able to get out of it and hopefully back in if you wanted to, okay? So that's the thing that I wanted to tell you. You can be part of YouTube, which is great, and hopefully you learn the lessons and take all this information. But if you're going day by day, I can only update you each day. I can't update you during the day and go on YouTube and be like, yes, STX came out with this news from Micron and Taiwan Semiconductor, and you guys should sell, because I don't have the ability to do that. I can only do that on Twitter on my private platform. Okay, so let me talk about my different positions, okay? What happened yesterday? I mentioned it was confusing because somebody took Carnival sweeps down, meaning they bought puts, okay? So they said Carnival was going to be under $23, and they were going to force it under $23. And I think at some point during the day, it was off like 4%. And I was so tempted. When I saw it at $21.44, I was going to jump in and ride it up to $22. And I think it probably closed maybe around $21.90 or something like that. I haven't checked it out, okay? But the point was, I was so tempted, but I remember this one person made a huge bet that Carnival was going down. And we know the Dow struggled today. So I was like, that's not the risk I want to undertake. So when I tell you guys, it's always risk versus reward. I said to myself, even though I would have crushed it, please don't risk it. All right, what else did I share yesterday? I mentioned plug that I might want to sell plug or get rid of my plug options the other day at 100%, but I wasn't really sure, but somebody was shorting it. So I told my platform someone's shorting it. So what happened is there was an individual that did puts on plug. I think they made like 80 or 100%. I'm going to show the slide later. Point was, it wasn't me. I provide information. That's why I'm here on YouTube. I give you information about certain stocks. I'm not telling you to buy a certain stock or sell it. When Chinese stocks were beat up, I said Chinese stocks are beat up. When Goldman came out and downgraded most of the Chinese stocks, I came out and I told you about that. If you chose to average down on those stocks after the fact, I can't help that, all right? We all make our own decisions. I tell you through transparency what my trades are. So let's get into my trades, all right? Or actually, let's get into some more stocks first. Delta Airlines, right? The sweeps that we saw yesterday were bullish, meant they thought Delta was going up. Now what happened? Markets and institution manipulation, right? Because what happened? Delta went up 3.5 points, 3.5% this morning. That's manipulation. The markets were struggling. Delta was up. Now, what did I tell my platform? Again, I said, you might want to sell at $42.16. No, that wasn't the high. The high was $42.26. And Delta does look like it's recovering. But the point is, when we plan ahead, and when I get to the lesson, I'll explain. When you plan ahead, when something spikes, first thing in the morning, 10 a.m. or something like that, you get out, you secure profit. Yes, it might go up higher, but stocks don't only go up. So I mentioned that today with Sophie, S-O-F-I. It spiked to 1630, up 5%. I said, minimize your loss or secure profit because I don't know everybody's entry point. So again, the strategy worked for anybody. So STX, I already mentioned that one. Snap. Okay, so I mentioned I got into Snap last night. So what happened this morning? When Snap dropped at market open, I doubled my position. Then Snap went from 2% red to all the way to green. And what did I do? I sold to secure profit. And I tweeted that I thought Snap could go even higher, but I did the right thing by securing profit. I did not know the market was going to throw up on itself. But when the market throws up on itself, we look at one thing if you're part of my platform, the UVXY, okay? Because volatility spikes, and I look, because if you look at the UVXY, all it does is go down. I look for the biggest spike. So again, this morning, I'm going to name my 3 positions. When it spiked to $28.28, okay, I bought puts. And then it went to $28.22. I bought my second position of puts. Then it went down to $27.56. I didn't sell because I thought it was dropping. I thought the markets were recovering. So what happened later in the day? It spiked even higher. So I went from being 30% profitable and 32% profitable. All of a sudden, I was 20% negative when it spiked higher. So when it spiked higher, what did I do? I took my third position. So the lesson is, if you ride the elevator, you ride it up and down and up and down. If you secure profit, you secure profit. I could have got in again. I was crazy busy, plus I was greedy. All right, look, the true fact is I was greedy. I wasn't crazy busy. I was greedy, and I thought the UVXY would just continue dropping, and I was going to make a lot of money today. Now, why do I say I was going to make a lot of money today? When I talk about my options position, I have like 2,000 here, 3,000 here, 4,000 here. When it came to STX, I had 28,000. When it came to UVXY, I have $33,000 played. I keep my money separated, all right? So I know which indice it's for because, like I tell people, okay, so far against XL, right, I'm 0-3 against XL. Against Tesla, I have 10 wins and 2 losses. The point is, against UVXY, I'm undefeated. So I stick with the UVXY because every time I own the UVXY. So when I tweet about it and I put a larger position in the UVXY puts that it's going down, it's because I'm more familiar with it. All right, so let's skip the wrap up and talk about the lesson today, all right, which is entry and exit position. So when I talk about securing or planning ahead, here it is, okay? So you plan ahead. Let's talk about entry first. You're looking at stocks. I tell you guys, follow the rules. Don't buy options before 10:30 when the spread's narrow, okay? The bid and the ask, it narrows to like a nickel or a dime. Before then, you'll see the bid is at $1.22 and the ask is at $1.79. There's too much cushion in there. So if you guess wrong, or even when you're correct, you could still be wrong. So we wait till 10:30 a.m. That's first, okay? But when 10:30 happens, let's take today, for instance, okay? Say you're looking at, what stock did I look at? Snap. I got back into Snap, okay? So I was following Snap. Snap threw up on itself. Now, I was only following Snap because I called the high, and I got out of the high, and then I'm waiting for the dip. So as it's dipping, I'm like, oh, it's getting tasty. I might buy the same call options. But then I said, the market can continue to go down. If it does, I would get screwed. I would buy in. I'd lose 30% right away. I'd give all my profit back. So you can't force things. You never can force things. When you have money on the side, you're fine. So when it came to Snap today, I looked for it to drop, and then I actually waited to see a bit of a rebound. It dropped to like $60, probably flat, or maybe even a little less than that. And then I waited to see the rebound before I tweeted it. So I tweeted it out. I believe it was $60 and like 33 cents. And I said, it looks like it's getting better. It looks like it's going up. And then it crossed over 61. Okay. So $61. And then it came back. So I'm still holding that one until tomorrow. I'm still holding a couple STX till tomorrow. I sold my other ones that went out a couple of weeks. I was up killer percent, and I ended up breaking even on it, making flat. And that sucks because I was right about STX. It just sucks that two people came out with downgrades. It sucks that the market got beat up. It sucks that Taiwan Semiconductor came out with their numbers, which I didn't think were all that bad, and Wall Street hated it. All right, so that all sucked. All right, next, if you're watching this, please give me a thumbs up if you like the content I'm providing. If you're learning something, I would appreciate it. If not, give me the thumbs down. Analytics, YouTube, the more thumbs up, the more thumbs down, the more comments, the more it shows my video out to other people. So good or bad, I just want some interaction. I want to know that you guys are with me, that you understand. So let's go back to planning ahead. So when you secure entry, because you're planning ahead, stocks dipping, you say to yourself, okay, what was I talking about? Snap, $60.10. I said, I went up to $60.33 at that time. I looked at the options. I said I could pay this much per option, but if it retracts 5 or 10 cents, because the market's shaky, it doesn't just go straight up or straight down. It plays around at every single number. So I said, if somebody sells off one position, it goes down 10 cents. I'm into Snap. And then again, so that's me planning ahead. If I planned ahead, now I thought Snap was going to $62. So I'm looking for my options to be worth, you know what, $2. I guess I have the $60 calls. I might have the $61 calls. Then I'm thinking going to $63. That's what it was. I have the $61 calls. I think it's going to $63. I don't know if it's going much higher than that, but it doesn't take much to move Snap. All right. Snap, just like Spotify, like Amazon, sometimes you'll see them at the top of the one-day chart. Then all of a sudden they're like at the bottom. Then they spike back up, and you're like, how can there be such a wide range in such a short period of time? So I play that to my advantage. So I'm looking for a spike there. Again, my break even, I'm already ahead in those contracts. So it's more about you know, what the max profit will be. And again, I'm looking for $63 on that. So hopefully I'll figure that out. With that said, let's get to some slides today. Hopefully I didn't confuse anybody there, because I kind of confused myself. The point is, when you plan ahead, you know your entry. Once you're into something, you secure your profit. You say, I'm happy with 20%. Okay, well, let's go into one more thing. So you say to somebody like this, right? So lately, the market's been harder to anticipate, all right? There have been spikes up, spikes down. So how do we plan ahead better, okay? We used to make 80%, 100% per trade. Remember I said for 9 weeks straight, I was on fire. We had like 35 out of 37 days were extremely profitable for us, okay? So in these hard times, you have to follow the rules. So what I do is I simplify. So going forward, we're only going to be looking at 1 or 2 positions. That way, if something happens, it goes down, I can alert people and say, here's what I'm thinking. Here's what I'm doing, and here's how I'm planning ahead. Right now, the stock is at $60. Should it go down another dollar? My option, which I have it for $1.20, will go down to 80 cents. At that time, I will put in a bid right now for 80-cent options. So if it goes down, I'm planning ahead. Do you understand the planning ahead part? So hypothetically, let's say it goes down and then it bounces right back up, because you know the market loves to sell off and shit like that. So it goes down. I get it. Now I'm in at 80 cents. I bought 2 contracts. My first contract was at $1.20. So altogether, I'm in for $2.80, which means my average cost is about 93 cents, 93.3 cents. Okay, so when it bounces back up, now I'm thinking $1.20, which is my initial entry point, is a good exit strategy. So the first place where I thought it was going up and it went down from $1.20, and this is a hypothetical situation, whatever you paid for the option, you pay $2, it goes to $1.20, you buy 2 more. By the time it goes back to $2 for option, that's your exit strategy. So when it's my example, and we'll say you bought at $2 and you paid $1.20 and $1.20, so you're in for $4.40. You have 3 contracts, so your average is $3.13. When it spikes up to $4 again, okay, and your average is $3.13, that's 83 cents. You're in for about 35% profit. So do you understand the rules? Some people said, Matt's a terrible trader. How can this guy tell you to average down on shitty positions? No. I don't tell you to average down on shitty positions. If something's in the tank and it's going down day after day, I say, screw that. Get out. Save yourself. Wait for the spike like Delta. Get out if you're not confident, okay? You made a spike in Carnival? Good. Get out. Secure profit. I don't tell people to average down and keep averaging down on bad trades. What I say is, the last time I averaged down on Carnival and Delta, Carnival was at $24, so it's at 22. 22 flat now, right? So I was wrong about averaging down. I'm down 8%, $2 basically. But the point is, you do your best to pick the bottom. You do your best to call the top. Where no one's perfect in calling the bottom. Understand when something's going down, that's what I'm trying to call the bottom. So if I miscall the bottom, at least I'm happy where I get in. And I'll use STS as an example. A couple weeks back, I was like, yeah, I paid too much. I bought it at $1.10. It dropped to 99 cents, but I was comfortable with it. Closed the business. The next day I sold for $1.50. Yes, if anybody got in at 99 cents, they made 11% more than me on profit. All right, so let's get back to the slides. Hopefully you guys get my lesson about planning in advance. It's about securing profit. I don't care what you're in or what you're doing. So pre-market video. Kevin, this is I think it's his daughter's account. They all started with $100. This one's up to $464. It's in like 5 weeks. So join the platform instead of being beaten up. You're up $100. Plan ahead. Nailed it. Yeah, so plan ahead. We plan ahead for the spike. I'm pretty sure Kevin got out of STX, and that's why he was so grateful. All right, next slide, please. Whatever it is. All right, Matt. Your teachings give me confidence. No one else appreciates you. 349 family. Yes. So it is a family that's what we're building. Now, I didn't tell him to go buy puts on NEGG. We all have our own stocks that we're into. We all have our own stocks that we look at. So if you're new to the platform and you're waiting for me to talk about specific stocks, I'll tell you through transparency what I'm doing. But if you see something and it looks like shit, you buy puts. If you see something and it looks like gold, then you buy calls. But remember, we're getting all about entry point. So you want to buy puts when it spikes most. And I'm going to give you an example, a plug example. All right, next slide, please. All right, so Delta, right, calls. His calls were down before yesterday. He averaged down. He set his sale price before the market opened. It spiked, and he made a quick 20%. So this is what I want everybody to do. And it doesn't have to be Delta. It has to be evaluating your position. Before the market opens, you look at it and you say, I have 10 contracts of this. It's worth $1.40. I would like 30% gain today. So I'll add 42 cents. I'll sell at $1.82. So before the market even opens, you put in your ask at $1.82 for your 10 contracts. When the market opens, if it spikes, goes up, down, whatever, sometime later in the day, your stock goes up before it goes down, or it goes down before it goes up. Who cares? If you get your exit price, then you just secured 30% and you can move on to the next trade. That's what I'm teaching. I don't want to make bag holders. I don't want people to be staring at the same stocks day after day and saying, like, please just move for me with this one time, because that's not how they react. The market follows Wall Street. Wall Street leads the way. They decide what's going on with the market. That's why you have to be ahead of the game. Let's get another slide up there if we could. All right, yes. So this I mentioned yesterday, right? What is this? Carnival. Okay, yeah. So I mentioned yesterday someone did a put sweep, meaning they bought all the put contracts at $23 for the expiration of tomorrow, and they paid the ask. So whatever the ask was, they just claimed them all. They bought them all, meaning they said Carnival is going to go down. That's what they're basically telling the market. I bought this shit. I'm making the wager that Carnival is going down. I said I am long Carnival, but I said it would get beat up today and tomorrow. Well, somebody listened to me because somebody bought the contracts this morning and returned 74%. So when you're watching my YouTubes and I tell you somebody did an offering or somebody got beat up or something like that, pay attention. Do your own due diligence, use your strategy, and make money. That's what it's about. And securing profit. All right, when Carnival turns around, I'm sure this dude sold. You don't want to ride it both ways. All right, next slide, please. What this person made. Oh, plug. So this is a plug option. Again, I mentioned plug was looked to be shorted. Somebody was on the short side. This person bought a put option when it spiked the most this morning, and they made 93%. It wasn't me. I wasn't short plug. I am long plug with September options that I'm up maybe like 10 or 15%, okay? The point is you could take any position off of what I'm telling you. If I tell you something has a short against it, yes, you better expect it to go down because that's what shorts do. They manipulate the market, and they're very good at it. All right, next slide, please. All right, you took profit. What was this? Okay, UVXY. This is what happened. I think it was this is probably from yesterday, this slide, because we play with UVXY every day. Again, I entered the 3 positions today. I don't know how much they're up, but I do know they're up. Yeah, I should really check that. Okay, next I have FCX. So I was telling you guys there was pure manipulation yesterday because you could see the heavy demand right before close. That was at 3:57 p.m. Heavy manipulation. They forced it down all day. At the end of the day, they were purchasing in. It went up. Now, they weren't holding for a long-term play. So what happened? If you're part of my platform and you average down the right way, let's go to another slide, please. You bought FCX yesterday, 80 cents. You thought it was the bottom. Boy, were you wrong. You were able to average down to 63 cents. You planned ahead for a spike after market open, and you sold your 7 contracts at 70 cents. So you only made 10%. The point is, that's good. It's not a loss. You planned ahead. Now, what happened to FCX today? It took a shit. It collapsed. So if you're holding on to this without a plan, without a strategy, and you're just watching your shit or your Robinhood account, you're staring at your phone, it's going down, and you're losing 100, 200. Now you're down 400 on the day, 600. That shit sucks. You better damn plan ahead, secure your profit, keep your money on the side. If you only have 3 day trades, I mentioned this before, save them. Use them during the week. Make 3 trades the entire week. Make sure you're profitable. Make 100% per trade. Make $100 per trade. I don't care. $300 a week is $15,000 a year. If you have bigger accounts, then make $900 per week. Okay, that's like $47,000, $48,000 a year. All right, next slide, please. All right, another person. Same thing. You sold 2/3 of your FCX. Move forward, but you're playing with house money. Okay, that's cool. So you had 1 contract going forward. It probably got trashed or wrecked. But good, you sold 2/3 for profit. That's what we do, secure profit. Next slide. So I really appreciate when everybody shares and when everybody does that. Okay, so planning ahead. 2 things. History tends to repeat itself. I believe I said this pre-market, or maybe I didn't. Maybe I said it right after. No, 10:13 a.m. Point is, STX spikes. Let's go on the next slide. STX spikes at open, then it goes down. I'm not sure what it's going to do tomorrow because I'm not sure what's happening. We go to the next slide, Carlos, man. Oh, you might be frozen. Oh, there we go. Snap. So this is what I carried over into this morning. $1.11, $62 calls, right? Now you guys are looking at Snap and it's around $60.60 saying this dude got crashed. No, $1.11. It opened at like $1.10. It went down. It went down to like 80 or 78 cents, something like that. I loaded up. It spiked pretty freaking hard and I sold for like $1.36, I believe. My average was under $1 and I sold for $1.36, so I was like 36% profit. That's great. So it spiked, and I continued watching it because I re-entered later in the day when it hit $60.30, and now I think it's probably at like $60.47 or something like that. All right, next slide. I expect good things tomorrow. Again, there was a bullish sweep on that one. Oh, here's my snap position. So I didn't crush it. I had 12 contracts. I made $858, which was 63%, and I said goodbye, and I sold it, and that was it. And then I waited for it to go down, and I re-entered. Next slide, please. This is what I'm talking about. I want you guys to do. Also, I mentioned AMC, how it's been in trouble. Now, I think I might have seen the light today, and I think AMC started to waver back. I think it might be cheap enough where people, like institutions, are finally saying, you know what, it's $32. If we buy it and we push it up to $39, those apes might jump on board, push it up to $60. We let them push it up to $60. We short the shit out of it, and then we sell all of our stocks with all the profit. So if the institutions are buying at $33 and you guys do manage to push us up to $60, what do you think they're going to do? They're going to sell their shares. They're going to short the stock. They're going to buy additional puts. All right. So if you're in AMC and you can make profit and it's huge volume and volatility each day down to 30. Let's look at it. It was down to what? 30 something dollars. AMC. Let's go. Its low was $32. Its high was 37. It closed at 36. It's spiking after hours. Okay. So let's say, I'll use the example tomorrow. Point is, you make money on the puts. I can't even see his percent, 100 and something percent, and you get the hell out. Next slide, please. You can do that with anything. UVXY, this was from yesterday, carrying over to today. The gentleman or woman, I forget who sent this to me, made what, 208%. But they were saying small accounts. I don't remember how many contracts they had, maybe like 3 or something like that. Okay, next slide, please. All right, options traders, aren't big on the stock anymore. Okay, so here it is. When I talk about manipulation, and don't be surprised if space tanks. And I think it was doing well after hours. Do I have space anywhere? Let's see what happens. Space. No, I don't. So let's look at it. SPCE. And after hours, it's up 2%. Okay, and it was down 4% today, so it's under $32. One big options trader made a $1.3 million bet, basically, getting put contracts implying that it has a $25 strike price, thinking the stock is going to go under 25 because you don't want it just to go to 25 because this contract is still worth nothing. So he actually thinks they're going to 24. So it's at 31. Remember, it was at 49 when I said they were doing their offering. So from 49 to 33 was 32%. Now it lost 4% more today. Now you're down 36% in now 4 trading days. Nobody has to ride that roller coaster. Everybody likes space. It's a cool company, cool idea, cool mission statement, all that shit. It doesn't mean you have to hold on to your stock, which is what I'm telling AMC people, GameStop people. I'm saying change your mindset. Invest the right way. Sell when it peaks. Let's say AMC spikes tomorrow at some point to like $45. Get the hell out. Wait on the sidelines. Tell yourself it's at 45. I will buy back in at 35. Don't waver from that. If it goes to 37, don't buy back in. Wait for 35. That's how you plan ahead. So if you have 1,000 shares, you manage to sell at 45 and you buy back at 35. Guess what? You just saved $10,000. You're still a supporter. You still have 1,000 shares. It just means you're a smart investor. All right, let's go to another slide, Carlos, please. Okay, it's turning small piles into big piles. So I tell you guys, in and out. So somebody was showing me their UVXY results, and it was like 170 here, 98 here, 35 here. It's okay. You want to go in and out, in and out. Yes, but secure profit, plan ahead. So if you buy something for $1.22, sell it for $1.40. Great, you did it. And it goes back to $1.09, plan ahead. You buy it at $1.09, you sell it at $1.36. You step and repeat, step and repeat. All right, I think that's it for slides. Then we can get some, yeah, this was it, more manipulation. So that's the focus, besides for telling you guys to plan ahead. So I hope you get the understanding to plan ahead. This is the manipulation. Goldman adjusted Seagate Technologies from 85 to 285 from 74. So it kept accelerating. It increased the price target to $85, which the stock is still under. So they're saying, yeah, we're a little smarter. Having it at 74, yeah, that makes us look stupid. So we're going to raise our price target to 85, which still happens to be $4 down from where it is. So when people say they upped their price target, aren't you excited? No. Goldman's a piece of shit company. Their earnings sucked. The other security company, what do? They adjusted their price target holdings to 95 from 80 up, but they kept a neutral rating. So people are saying, why are you upset? They raised it to 95 because I believe the price target should clearly be over like $105, $106. So I'm wondering if today was just consolidation, that people knew the market was going to throw up and they got out of STX ahead of time and it consolidated. Because let's remember, it had 6 or 7 straight up days, more inflow days. So people are accumulating stock. So if you know the market was going to tank, and I told you Taiwan Semiconductor tanked this morning, so if you think that is going to tank this morning, what are you going to do? You're an institution, you're a hedge fund, you have 1 million shares. You're going to sell them. Why the hell would you write it down $1? And they don't have 1 million shares. Say they have a couple 100,000 shares. I'm thinking it only traded probably 1.4 million today. So let's say they had 400,000 shares and they were selling them to save an extra $1 or $400,000. That's why. So I'm curiously watching tomorrow. I did tell people on my platform, because I don't want to get accused of anything, I told them, please don't average down, all right? 2 price targets came out. I wasn't pleased with either. Please don't average down. Wait, let's see how it plays out tomorrow. So the only thing I was sure about today was the UVXY going down. And I went on at like 3:30 and I tweeted out, I'm holding my position. And let me explain why. Here's the lesson here. So I have my UVXY positions at 20, 27, 28, or 28, 28, 28, 22, 28, 40. So when it's riding up before the close, like 20 minutes, 30 minutes before close, and it goes up and it spikes to $28 and like 50 cents, and I'm negative my positions, I'm like, okay, so this is kind of the worst. It's like making it through a battle or a fight. If you make it through the war, you're like, all right, well, let me see what goodies I get for making it through the war, for coming home alive. Let me see what the rewards are. So the thing with UVXY is I didn't want to sell at the end of the day. I've got a lot of money in there, and the majority of it expires tomorrow. But I also know that if I'm correct about the UVXY, I will make a shitload of money. Now, here's the difference. Let me explain to you people, and it doesn't matter the size of your account. You just have to shrink the numbers down so that it matches your account, whether you have 100, 1,000, 10,000, 100,000, okay? When I invest, and I'm investing in the UVXY, and I'm making, let's say, $7,000 or $8,000 or $9,000, all right, 30% of my money. So let's say $9,000, okay? When I have positions in I don't even know what losing position. It's XL. So I had a position in XL where I lost $2,500 because I ended up selling out this morning on the spike. I sold for 20 cents. I bought those contracts for $25 to average down. So I actually averaged down and still sold at a loss. But the point is, I lost $2,500 in my XL trade. The AI trade, I lost $4,700. Okay, so it adds up. My Carnival trade, I made money. Snap, I made money. STX, right now, I'm down some money. The point is, when you look at your positions, the one mega position I have is UVXY. That controls my portfolio. And again, I'm bearish on it, so I have puts, okay? Just straighten that out. But the point is, if I'm correct about that, I don't have to be right about my other positions. Yes, I want to be right. And when I enter into them, I believe I'm going to be right. And that allows me to average down the right way because I'm buying 3 and I'm doubling down to 6 contracts. or I'm going out of a couple of months out or a month out, and I'm spending double the amount of money. So if I spent $2,400, I'll spend $4,800. This is how I average down. If you haven't seen my episode 37, I talk about averaging down. It's one of the best episodes out there. There are other good ones. The $1 Million Days were always a good one. There was like April 23rd, and then there was a day in May. Anyway, let's get to some questions and comments, see if I can help you guys out. All right, Brandon, you rode the elevator up and you learned some really valuable lessons the last 2 weeks. You don't have to average down. Don't enter every play. Yes, okay. So let's just summarize real quick. I'm going to simplify going forward, meaning I'm not going to give out alerts on multiple things because people get tied in and then people break the rules. Now, the rules say invest in at the money or in the money options, okay? Meaning if a stock is like $24 and like 80 cents, $24.80, okay? In the money or at the money is anything under $24.80. Even 25 might even, touch be okay. But when you're telling me you have $30 options and the stock's at $24.80 and you're so far out of the money in this beat up market, that just doesn't make sense. So please follow the rules. You don't always have to average down. If something's getting beat up and I'm like, oh, the Dow's getting beat up, or it might be a rotation back to the Dow. So tech is getting beat up. So you're in a tech stock and it drops, right? Because you don't have earnings and then it drops more. You don't have to necessarily average down if you think it can continue to drop. Now, keep in mind, the 10-year is pretty low, which means investing in our stock market pretty cheap right now. And understand, when people invest in our stock market, they're not looking for staples like a Lockheed Martin, a Raytheon, Dow stocks. They're looking for tech with the biggest potential of gains. So that's why tech is usually strong when our interest rates are low like they are. In fact, Kathy Woods thinks we're having deflation. I've mentioned that a number of times. So we'll see what happens out, how it plays out. I believe the 10-year is probably at like 135 right now or something to that extent. All right. Hey, everybody. I was looking at D-Dog. Hey, Matt, what do you think? Good inflow day. Yeah, D-Dog is one of the favorites. NET, which is Cloudware, is another one of the favorites. I think they're both on the spreadsheet for stock positions. I bought D-Dog the other day at 104 and change. I think it's only 105 now. I'm going to look it up right now so I can give you an honest reaction here. D-Dog. And, yeah, it's 103.48. It was as low as 102. So that would have been your buying point. But that would have been a scary point to buy in at 2 o'clock. But, yeah, I happen to like D-Dog. Now, so it's off 1% today. So here's what I would do, right? It's down after hours, too, it looks like. 102 and change, maybe. So, yeah, I might look to enter into D-Dog. Now, enter at a 25% clip. So understand the rules on the platform say if you have $2,000 to invest in D-Dog, your first purchase of the stock would be $500. If D-Dog goes down 10%, you buy another $500. It's dollar cost averaging. It's making sure we can't call the bottom. Now, I believe Michelle's probably talking about options. So let me give a quick look over here. D-Dog has been selling off 4 straight days. I mentioned there could be a rotation from tech into the Dow. So I would actually stay away from D-Dog for another day or two. I mean, it really depends what the market's going to do. If I knew the market was going to be strong tomorrow, I would tell you, yeah, D-Dog's going to go up to 106 because that's a fact. That's what will happen. Now, if the market shits and throws up on itself tomorrow, then it's likely D-Dog will visit $101, okay? So that might be your buying opportunity. Again, I don't know what the market's going to do. I hope it doesn't go down to $101 tomorrow because that means the UVXY would be spiking. And if the UVXY would be spiking, I have a lot of money there. So I just had to check after hours. It is still flat. So it's at 27.69, okay? So 27.69. Let's remember it was battling 28 there. And I get it spiked right before close to like 28.50 or something like that. And then it dropped. Every time, this is how the institutions manipulate the market. Every time there's a huge selling shit on day, like today, right? What do the institutions do with 10 minutes left? They start buying everything up. They start buying everything up. You know what they might do tomorrow? If we put futures up and the market goes up tomorrow, they might sell and shit on us again 10 a.m., which is what they did today. So do not get fooled, all right? I'm hoping for a good day on Friday tomorrow, but please, if you get a spike before 10 a.m., you maybe want to secure profit, because history tends to repeat itself. So what happened today at 10 a.m. when the market fell and then it can just continue to tumble and fall the rest of the day? It might happen tomorrow like that. So what's going to happen if the markets are calm and futures are decent and both indices are green tomorrow morning, up 20 points, 50 points, the UVX will go down and I will claim my profit and I will move on. And that way, if they do some bullshit at 10 a.m. and sell off everything, I'll be ready for it. I'll be ready to enter into a new position. It's always good to have money on the side, okay? It doesn't matter how big your account is, 1,000, 10,000, 100,000. Money on the side is good. All right, let's get another comment question. All right, It really depends. It depends when their sweep options are for, because I mentioned sweep options. Somebody did a sweep of January options for Delta yesterday. Okay, so they were thought Delta's going up. Then the good news came out, and then the manipulation again. The analyst came out with a raise on Delta's price target. What a shock that people bought leap year options yesterday. Yes, that's an institution they're going to hold for a few months. They might hold all the way to January if the market continues on a good streak. However, if the market decides it's going to throw up on itself in October and they're already up 50, 80, 100%, they're going to sell. And I know we look for 50, 80, 100% in one day. They don't. That's why they be leap year options, okay? But other institutional positions, say the guy that bought the Carnival put sweeps that expire tomorrow, okay? He's obviously only holding till tomorrow because they expire tomorrow. So he might have exited out today. When we saw Carnival dip the most, and I think it dipped to 21.20 something, he was like, as it spiked back up to 21.30, he could have been like, all right, I'm securing profit. And the dude probably made like 780,000, something to that extent. I mean, it is what it is. He bought all those options. All right, next question, comment, please. Actually, it's probably 7.8 million. I probably put the decimal point of the wrong thing in my mind. Okay, how long do shorts attack typically last? It really depends how well they're working, okay? So we can go to a short attack example on like EBON, okay? It got short attacked. It went from 11 to 9, from 9 to 6. They did an offering. It went to 4. At 4 or 5, it got short attacked, got pushed to 3. Then it went back to 4. Then it got pushed to 3. Now it's 250. Now I believe it's like 230 or something like that. It's also a Chinese company. So in addition to being short attack, which ended a while ago, there are no shorts at play there. It's a Chinese company. So where it looked like it was rebounding last week or 2 weeks ago, actually, before July 5th, over $3, maybe even to $4, it sold off because it's a Chinese company. So short attacks play a role, and the shorts exit. So if you see somebody short attacking a stock like Hindenburg, right? They came out with a report against the company. They're already positioned. They'll probably be in there maybe like 1 or 2 days. They're going to, I mean, if it's working and the stock is dropping and the market's difficult, if the market continues to be difficult and you're short attacking a stock, you could just keep riding because they can keep tumbling down because the market's throwing out of itself. Plus, you're pushing shares of stock onto the market. However, in a bullish market, it doesn't last that long. They go in, they secure profit. Once they've done that deal, they're out, and then they let the retail traders mess around with it, which is what happened to a lot of the meme stocks, right? So if you look at a couple of the meme stocks, they just get beat up. When they're done being played with, the volume goes low. Let's talk about Marin Computer Engineering, something like that. There was also Bridgeline, which was up like 30 or 40% this morning, BRIL, I think it is. And then it went down. Once they're done playing with it, again, these are retail traders that are trying to manipulate a stock, and Wall Street doesn't give a shit. So Wall Street's watching on the sidelines. Hey, look, they're pushing it up again. And then Wall Street's like, let's just short that shit. So they short it because they have a lot of money. So if you look at Marin, I think it's under $10 now. Remember, it was a $20 stock. People were like, oh, it's going to 25. It's going to 27. Same with Bridgeline. Bridgeline went from $6 to $12. I think it's like $6 or $7 right now. Okay, so you got to be really careful with these meme stocks, with any shorted stocks. It's not a good thing to battle shorts right now. When there's an offering on a stock, it's not a good thing to battle offerings. Again, Space had an offering, went from 49 to 32. Who else did an offering? One other company did an offering. I can't remember who. Xpeng did an offering, I believe. No, they went public on the Hong Kong exchange, which failed miserably. There wasn't much demand for the stock, and since then, on the U.S. market, they're down over 12%. So again, there are other things that influence your stock. All right, let's go on to another question. It's a good question. All right, what does everybody think about no beard? Yeah, I know. Some people say I look like, I don't know. I hear bad comments. All right, hey, Ghana, I'm very good. John, yes, John Travolta. I like that comment. Thank you so much, Michelle. You're welcome at my party anytime. All right, Caroline, UVXY has a $28, $7.30. Put your only up. Okay, so let me explain to you why you're only up 2.62%, okay? First off, you're out of the money, and then you went 2 weeks out, okay? So yes, for options on my platform, I tell you, if you have less than 7 days till your option expires, you want to go out another week or more, okay? Without a doubt, that is the fact, okay? However, when we're talking about ETFs, and here are the 3 ETFs I like to play with, the UVXY, the SQQQ, or the SDOW. When you're playing with that, you're looking for a more instant return. So if you're earlier in the week, say we were Monday, I would say you just go out to Friday. However, since we're Thursday and we only have tomorrow, I would say you would have been smarter to go out till 7:30, and you wouldn't have had to go out till sorry, to 723, July 23rd. You wouldn't have had to go out to July 30th. Okay, so you're only up 2.62%. No, if it falls another dollar, you will reap the rewards. Okay, as it continues to go down, I should you have cashed out? No, I carried my over to the next day. I'm thinking, I'm giving you an estimate right here of the UVXY. Let's say we have some type of decent day tomorrow, where I'm not saying the markets are up hundreds of points. Let's say tech is up 80, or reverse it, the Dow's up 80 and tech is up 50 or 60 points, right? It's a Friday. We're all taking off. There's not crazy volume. There's not crazy volatility. There's no selling off. We saw the sell-off today. We saw the craziness today. I don't think it happens tomorrow. So with that said, I would say the UVXY could easily go down like 6.5%. So 6.5%, it's at 270, 279, so it's 276. Be about $1.20, about $1.66. So I would look for it to go right down to about $26. So at $26, you have to look at your option and say, what would it be worth? So you're watching the UVXY. If it goes down to $26, that's a good exit strategy. So you guys ask me how I plan ahead. That's how I plan ahead. I make predictions about everything I do. So whether you're following me, not following me, have your own stocks, whatever it is, always make a prediction. So you make a prediction, and I just came up with 6.5% because if it's a strong day in the market and the UVXY was up like what? I've seen it up like 7 to 14%, but on strong days in the market, I've seen the reverse happen 8, 10%. So I said, you know what? Tomorrow doesn't have to be that strong of a day in the market, but as long as it's a calm day, then the UVXY could drop, 6 to 7%. And then I came up, I said 6.5%. If it drops 6.5%, it goes to $26. Now understand there will be some resistance. When it drops low enough, people go, oh, that's so low. The volatility is crazy. The market scares me. I'm going to start selling. So the more people are selling, the more the UVXY will spike. So when you saw the spikes happen at different time, again, I believe it's manipulation, all right? It's like a snowball effect or a firecracker. You light it up and you let the sparkles and the explosion go everywhere. And the manipulators and the hedge funds, they are so great at that, okay? What else did I want to talk about today? Did I was another stock? So yeah, AMC is crushing it after hours. Look at that, up 10% after hours. So, yeah, I mean, it didn't surprise me with the action that they saw today. Now, I'll tell you why. Because the inflow and the demand just today for AMC, we haven't seen that since June 17th. What's today? Like July 14th, 15th, something like that, 14th maybe. So we haven't seen it in over a month. Today's volume was just sick. I mean, it was really sick. If they can keep it up tomorrow, then yes, the stock can spike. But understand this. Some of the people that might have been buying in large positions, let's see. Oh, boy, 5 million. Okay, it definitely could have been institutions. So if institutions are helping pushing AMC up through the roof and you guys take over after hours and push it 10% after hours, and let's say it opens tomorrow and the institutions, they don't give in. They're not shorting it yet. So without any hesitation or any resistance, it's just going to explode. So let's say AMC explodes tomorrow, okay, and goes up, 10 points or something like that. What are the institutions going to do? They're going to plan accordingly. They're going to buy puts that expire tomorrow first because it's going to be up to, let's say, hypothetically, I'm just giving you a situation. It's up to $45, and they start buying the $45 put, the $50 put, the $40 put, the $35 put, and then they sell all their shares at the same time, right? And they force it down, and then you apes are buying it, and then they're forcing it down even more, and then they start shorting it because they don't actually have to have the shares to short it. So then they start shorting it, and they're shorting millions of shares. Now, granted, if you guys can keep the volume up of what? 193 million shares, then you've got a shot. In fact, you probably need to go to 300 million because the institutions would gladly short 50 million shares. It's a dip in the bucket for them. All right. Hey, Matt, sorry I got sidetracked. I'm down about 50% on CCIV, $25.720. Is it worth averaging down? All right. So let's look at the stock first. CCIV. So CCIV, like Lucid, it is Lucid, but like all these companies, they don't have earnings yet. When Tesla comes out, and I mentioned this previously, but I'll mention it again before I get to that. When Tesla comes out with their earnings, they're going to have to absorb on their books a Bitcoin loss of like $100 million in their quarter two earnings. So I don't care if the earnings are good or bad. If you throw $100 million loss onto anybody's books, it's probably going to look like shit. Now, the good thing is Wall Street already knows about it. It's being talked about. It's being whispered about. It's not going to be any news. It might be news to the retail trader when it says, what, they lost how much money? All right, so the last 7 out of 10 days, they've been selling ever since it peaked at $28.74. Understand that's also market sentiment, but market sentiment hasn't changed. So as long as tomorrow's an outflow day, if the markets are shitty tomorrow, then yes, you better get, I mean, it's tough. It's a tough decision. If the markets are shitty tomorrow, you don't want to average down, okay? You either want to hold it or you want to get rid of it. Now, if you do average down, I wouldn't be buying the $25 calls because your stock's at $23 right now. So you're $2 out of the money. If you want to support that position, you use double the amount of money. So let's say you invested $2,000. You'll use $4,000 because you're changing the strike price. So you're doubling the amount of money. So you'd go down to the $20 calls and you'd buy $4,000 worth of $20 calls at 7/23 expiration. But that's only if you think you're right about the stock. Right now, the stock's chart doesn't look good, but I'm betting most of the charts that I look at today are going to look like shit. They're going to look like heavy outflow for 3 straight days. Now, remember, CCIB did try and turn around from July 8th to July 12th. We had 3 straight inflow days, and it went up to $27. So, yes, I understand how you get the $25 calls. If you choose to average down, and it's your choosing, and you might want to look at some of the other tractors. I might look at Lee. I might look at Ride, Workhorse together. I might look at any other Nikola. I might look at any of these companies. Tesla, see how Tesla's doing tomorrow morning before you make your decision. They're all the same family. It's not like CCIV is going to go up 10% and everything else is going to go down 10%. If they're all down, they'll all go down. If they're all up, they'll go up. And you can look at inflow. So I look at inflow for related stocks, and I'm like, okay, people are buying the industry. It's okay to hold, or it's okay to average down. Or you say, oh my God, they're selling this one, this one, this one, this one, this one. They're probably going to sell mine too. Let me just get out. I'm down 50%. I'll absorb the $500 loss or whatever it is, and I will rethink. Now, if you absorb the $500 loss, and let's say CCIV goes down another 4 or 5% tomorrow and goes down to like 21.90, you can start buying some options tomorrow because right there, you just saved yourself at $500. So if you want to chance it and say, well, it's house money because I technically could have rode that down and been out another $400 or $500, except for I exited out, took the loss, and now I'm going to exit back in at what I think the bottom is. So you might want to look at a strategy like that. All right, next question. No, sell, okay? And here's why. Ford has multiple put sweeps that were bought up. So 3 or 4 days ago, somebody bought up all the put sweeps, the $15 expiring this Friday. So you're good to the 19th of September. So I do like Ford, but if for instant gratification, it's like for people that were stuck in Carnival, and I said Carnival is probably going to go down today and go down tomorrow, okay, because someone bought the put sweeps. Ford looks like shit. I mean, it's still consolidating. It still looks like the last stock I mentioned. So again, it looks identical to CCIV. It spiked around June 22nd, and it's been going down ever since. So yeah, it's at $14. The guy had $15 puts. It went as low as $13.94, which isn't far off where it is now. It's about 6 cents. So I would not sell. I don't want to take the loss on Ford because I actually think Ford could easily be like now maybe like $17 by then. I originally said I think Ford's going to 20, and by the new year, meaning by January 1st, I think Ford will be at $20 right around. GM made a major announcement. I think they're investing somewhere between $28 and $45 billion into the electric vehicle market, meaning they want to be one of the leaders. They're America's company, you know, Ford, GM, and what was the other one? We had big 3. Well, now I only remember 2. Maybe it was, I don't know. Okay, next question, please. So, yeah, you can hold on to that unless you see Ford getting beat up tomorrow. I mean, it could go down another. It's like when Delta went down every day 1.5%. So it was like 18 cents every day, and it was just painful. It was like paper cuts. So I'd be careful. Matt's thought on eBay expiring tomorrow. Okay, eBay looks freaking strong. All right. I know I talk about eBay, and the great thing is eBay follows the same pattern. What does eBay like to do in the morning? It likes to spike in the morning, and then it likes to trickle down, and then it likes to recover. So let's look at it today. Hold on, let me just get my day chart. Okay, yeah, perfect. So this morning, yeah, no, I am looking at the right chart. All right, it spiked to $68.60, okay? This morning, a little past 10 a.m., maybe 10 a.m. Then the market threw up on itself, and it was as low as, here it is, come with me. What was it? $67.64. So at least 50 cents lower, which is what? 50 cents is like 1%, okay? So yeah, eBay looks great. I would plan to sell it tomorrow morning. If your option expires tomorrow morning, I would assume you'll get a spike of maybe like 60 or 70 cents. So it might go up to like 68.75. That would be my exit strategy. So you plan ahead, whatever option you have. You say, if eBay is 68.75, it's up 60 cents tomorrow. You multiply that 60 cent change in the stock price by the delta of your option. Let's say it's okay, 0.8. So 0.8 times 60, 48 cents. That's your answer. So whatever your option is selling for, let's say it's selling for $2 and 202 right now. So you add 48 cents or $48, then it becomes 250. So you know your exit strategy again. So when I tell you guys to plan ahead, have a strategy, and someone says, how do you figure out my exit strategy? You figure it out. You take your stock, you make a prediction. My stock's going up 60 cents tomorrow at some point tomorrow morning when the market opens. When it goes up 60 cents, my option is going to go up 48 cents. When my option goes up 48 cents, instead of 202 where it closed, someone's going to buy it for 250. So you type in your computer tomorrow morning at 8:30 or 9 o'clock before the market opens, and you're like, sell my option for 48 cents more than it is right now, which would be like 23% more than it is. So you're assuming it's going to spike, and you're getting out with extra profit. You probably made a little profit today, and you make more. Now, why do I say she made profit? Because the stock actually went up 11 cents today. eBay's a beast. It was as high as 30 cents up today after taking a bath. And eBay takes a bath every day. Every day when the tech gets crushed, eBay gets crushed, and then it rebounds like the champ it is. All right, next question, please. All right, Carl. IWM, August calls or puts. Okay, good. So the first thing is you don't have a position, because I will tell you that someone did a put sweep on this. So you guys hear me say this a lot. IWM is the Russell 2000, okay? So somebody did a put sweep, and they did that prior to yesterday. So they incorporated yesterday and today, saying the Russell was going down. Now, yesterday, I think it was off like 4 or 5%. I think I remember off 4%. Let's just say 4. Today, at its low, it was 214. It's 217 right now. So it's 3 points higher, which is a whole 1.5%. So it was actually down over 2% today. So that person on their put sweep, assuming they exited out at the lowest point today, which we all know was 2 p.m., and then the market started recovering around there. So we'll go 2 p.m. I don't know if you should do that. Again, major selling. It broke a downside resistance, but all these charts look the same, meaning from July 8th to July 12th, there was inflow out of every chart you guys are having me look at. So there were people buying the stock, buying the stock, buying the stock. And then the last 3 days, there were people selling the stock, selling the stock, selling the stock. So I don't know what tomorrow brings. Oh, I will tell you some interesting news. Okay, here's a pattern. Anybody that wants to know why I get excited, okay? Look at the 1-month chart for the Russell 2000, which is IWM, okay? Now, I know people like to watch this on replay. So if you're watching, look at IWM, open up Webull, look at the 1-month chart, okay? What you will see is it hasn't outflowed or inflowed more than 3 days in a row. So 3 days in a row doing whatever it does, and then it reverses course. So let's get to it. Huge sell-off June 17th and 18th. That's 2 outflow days. Then you had 4 inflow days, green days, it went up. Then you had 3 outflow days, it went down. Then you had 2 inflow days in a row, 3 outflow days in a row. You see the pattern? Multiple days in a row, only stopping at 3. Then you had inflow 3 days in a row. Guess what the last 3 days have been? Outflow days. So if you wanted to play IWM and you just wanted to play data and rationale, and you know what? I'm adding this to my watch list tomorrow because that's crazy. Tomorrow should be an inflow day, which is good because if there's an inflow day for the Russell, that means there's an inflow day for many of the Russell stocks. If there's an inflow day for many of the Russell stocks, that means the market is going higher. If the market is going higher, that means the UVXY is going down. The markets are calm, they're going higher. So again, anybody that missed that, IWM, it's very interesting. Look at the 1-month chart. You'll see outflow days, inflow days, they run consecutively or together. 3, 3, 3, 3. So if I was going to buy, I would buy calls. I wouldn't buy them for August. I would buy them out till July 23rd because you're playing a pattern. I don't know what's going to happen in the market or with the Delta variants, meaning COVID cases and shit like that, and how it's going to play on the market. So I'm looking shorter term. I'm looking 1 week out. So I would say dip your foot in tomorrow. Buy 2 call options. If you need to, you know how to average down. You buy 4 more. However, if you take a bath on this, let's say Friday and Monday, and they expire the next Friday, you only have 4 trading days. I would say then you go out to August. Then you give yourself more time if you're incorrect. Shorter term, I would go with call options just based on the pattern. 3 outflow, 3 inflow. The next 3 days seem to be inflow according to the pattern. At least 2 days in a row because it follows. That would tell you Friday and Monday are inflow. I will watch it carefully. Next question, comment, please. All right. Yes, when you guys ask so nicely, so there was a person on my public Twitter account that said, hey, dude, I'm trying to get your attention, blah, 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 blah. And he was just such a jerk, all right? So if you want to be nice about something, I'm not asking you to, like, kiss my ass or anything like that. I'm saying just when you tweet me or something like that, I'm sorry for raising my voice or my pitch, octave. Just say, yo, dude, I know you're busy. Can you look at this? Yo, dude, I missed this on that. Can you just give me an update? I thought you were involved with this stock or that stock or whatever it is. The niceties go a long way. They really do. When someone's a dick, I'm probably going to be a dick back and be like, listen, that's what you chose. Now you're asking my opinion. All right, so Smile Direct Club. That's, oh, God. I remember when this stock was $14, and I was like, I can't believe that people like this stock. So I will tell you, Smile Direct Club, 4 straight days, outflow. It would have been great to have puts 4 days ago. Even when there's been inflow days, which there have been maybe like 5 or 6 since June 22nd, the stock's gone from $9.18 all the way to $6.92. It's down 28% in the last month. So I would stay the heck away from there. Now, the other one, I'll give you a thumbs up. It made my list. QS. Why? Because I was looking at it today. That stock has been so freaking beat up. It is so unbelievable, and I see demand there, and I actually see it turning the corner. And the great thing is inflow versus outflow. If you look at the last month, it's probably even. So the stock is down 11% over the last month. However, there's probably been like 13 inflow days and 13 outflow days. So yeah, I didn't tell anybody yet, but since you gave it away, if people stay to the end and they're watching this, QS, right? QS, that's the new watch list one. It moved to the top of my watch list. I saw it earlier today. Do we have another question or two? By the way, everybody, I am not a financial advisor, and I haven't mentioned this yet. I rarely mention my platform. Please hit the like button, hit the subscribe button. Algorithms go a long way. The same way I tell you algorithms, that's what we're trading against, these computers, these algorithms, these hedge funds, these institutions. Algorithms work for YouTube as well. So the more comments, you can say, hey, Matt, good show. Hey, Matt, worst show. Hey, I liked it. Thumbs up. Hey, this sucked. Thumbs down. I don't care. The more interaction, the more comments, the better YouTube likes me and the more they send it out to. And I'm really about just educating people and helping people. So please, if you want to help me out and spread the word, it's all organic, everything Carlos and I do. So please just pay it forward, hit the like button, send this to your friend. I'll retweet the episode. If you can't watch it, just be like, hey, this dude, he says some crazy shit sometimes, but some of his ideas are correct. I don't claim that all my ideas are correct. All right, can I clarify a put? If it's at 24.50, you might want to go to 25 for a put, blah, blah, blah. Okay, so I will clarify. If you have a put contract and you think a stock is going down, so the stock is $25, so you want it going down. So the opposite direction, if you're losing money, it would be going up. So your put's at $25, which gives you the option to sell shares at 25. You want the stock to go to 20. When it goes to 26, you would increase your puts. You would be like, okay, I'll buy the $26 puts because you're in or at the money. Anything higher than the put number means that you're in or at the money. So a $30 put, you want the stock to go to 20 and it's 25, you're in the money because you have a 30, it's at 25. Get what I'm saying? So thank you so much. Someone's saying hit the like button. I appreciate that shit. That's great. I appreciate that, man. It's all about the like buttons, and it's all about passing it around, and it's all about sharing this with more women. My percentage is like 92 men watch me, 92% men, 8% women. Everything's equal in life, and everybody deserves to be on the same level playing field. Remember, I first came on YouTube, and I said I'm here for 2 reasons. Number 1, to simplify. Number 2, to level the playing field. That's not why I'm here. I'm here to educate you. I'm here to make you the best trader you can be. I'm here to make you efficient. I'm here to teach you things about entry and diving in and planning ahead, and that's the thing I stress the most about today is the planning ahead part, because whether you're entering into a position, if you pay the ask, you're just asking for a beating. If your option's at $3 and you're like, all right, I'll pay $3, looks good, $3, boom. And then what happens? It goes down to $2.30. So if you plan ahead and you're like, I'm looking for the stock to dip at $2.50, it looks interesting. At $2.50, I'll put in my bid for $2.30. And when it dips at $2.30, you got it at $2.30. When it goes back to $3.20 and the other dude's up 8%, you're up 90 cents and you're in at $2.30, you're up at about, what, 46%. All right? So there's a huge difference. All right, let's get another question out there, please. My husband said, thank you. He did his first option trade and doubled his money. Your husband's great, and you are great, and thank you. Okay, so it's not about, let's just speak real clear and firm here. My platform is not about giving out alerts. I get more enjoyment seeing somebody say, hey, dude, I was in this stock. I heard you maybe speak about it was going down. I did my own strategy. It went up first, and I was pissed at you, and then I bought 2 more puts, and then it finally went down, and now I'm in the money. The point is, if you follow the rules, if you pay attention to the rules, okay, don't buy options before 10:30, plan ahead, start out using the 25% rule. If your options go down 40 to 50% and you are calling the bottom, you can average down. If you average down the right way, meaning you only have, if you have 7 or more days and you're still in the money, then you can average down. If you have 7 or less days and your option is no longer in the money, then you need to go out some extra time. Let's use XL for an example. You have a $7 option expiring tomorrow. XL's at $6.50 or something like that, and you want to be in XL. Now, I hate XL, so I'm not saying buy XL, but you want to go out to like August and you buy the August $6 options because $6 is in the money now. August gives you more time and you use double the amount of money. So that's how you average out. So thank you so much for that comment. I appreciate you. Anyone else see large orders for Boeing in the past 6 days of inflow? Yes. So institutions, when the Dow is getting shit on, okay, institutions know that Boeing will probably be at $300 or $320 or $340 later next year. So let's say a year from now, right? And Boeing's at what, like 230 something now? Let's say it's at 240. So it goes from 240 to 340, okay? That means it's going up 40%. For institutions, that's great. Yeah, they're going to go into Boeing. They're going to go into Delta, Carnival, all these things. So if you see large orders but the stock isn't moving, that's all they're doing is buying the bottom. They're not waiting for instant gratification. We are, because we have options expiring tomorrow, next week, whatever it is, next month. They don't, because their call options are leap year options, and because they're stuck, they can hold till whenever. They can hold for as long as they want. So understand that. But yeah, I mean, it's a sign that they're getting positioned. Okay, when you see inflow and the stock is still going down, which Boeing is, it's a sign they are getting positioned for themselves and they're getting their money in. We're now in the third quarter for them. So if they are to exit Boeing, which they probably won't do, Boeing will probably make money for them in the third quarter. So they'll go from 240 to 260. It'll be on their books as 8% for the third quarter, which means they'll keep it on their books for the fourth quarter. When it makes 8% in the fourth quarter, they'll keep it on their books. So it'll make 16% in the first quarter because, yes, they will make 40% on that. Thank you so much, everybody. Have a good evening. I'll see you guys tomorrow morning. Those of you on my platform, first thing up and early.